So I've gotten asked to discuss these videos that are saying you need 1,000 shares of SOFI and other things of that nature. I mean, we discussed this with other stocks in the past, but it's even more dangerous when we're talking about a stock like SOFI. So I figured I would break down these videos, give you the hard truth about this type of investing, and we will look at SOFI specifically, guys, the good and the bad and everything else so you can make the best decision possible for your investing. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. I know there's a lot of SOFI hype out there right now. Trust me, I saw in my last SOFI video, the comments down were just, some of them were reasonable. Some of them were just, it's like, okay, somebody's out there saying something that's clearly not even true. There was even fake stats down there. Hey, come on, guys, let's do a little bit better than that. Let's at least get the metrics right. Okay, so let's start with the good stuff first, because there are some awesome concepts in these videos that you need to know. They're critical to your learning, guys. And then we'll also kind of discuss the negatives as well, because you got to know what to stay away from. And I'll give you the hard truth about owning 1,000 shares of SOFI, and it's not what you think. So, just you want to stick around for that too. So number one, it encouraged buy and hold investing. The good news was, and it was probably my favorite part of these videos, is it shows, and they didn't in any way, shape, or form during the video, didn't say anything about taking profits. It basically shows you don't need to take profits. Just invest and let compounding work for you. I mean, how do you get rich exactly? And I can tell you this much, it's not by doing all the work, but by letting others help you get there along the way. Compounding is kind of like your own little personal worker there. They're going out and they're making money for you. They're doing all kinds of things in the background. When you think about SOFI, Noto is getting paid millions of dollars to make you money as an investor. That is his job. And clearly he's good at it because he's getting paid millions of dollars to do it. There's no reason why I need to do all these other things to try to do his job for him. His job is to turn SOFI into the most profitable company that he can, which of course in turn rewards us as shareholders with higher share prices as we go. So kind of think of it that way in regards to buy and hold investing. And why I love it and why it's so effective is I don't have to do anything. What did I have to do for my 50,000% plus gain in Apple? Absolutely nothing except just hold. That's it. Ignore all the noise. Don't take profits. Don't listen to what Wall Street or CNBC or people on YouTube or anybody else says. Just freaking hold the stock and let it go. Ignore what everybody else is doing with the stock, all the moves that they're making, irrelevant to mine. All I had to do was hold, and that's exactly what I got. It would have been impossible to trade and pick great stocks over and over and over again to get that sort of gain. You don't have to do it. The hard part is picking a great company up front. But once you pick that great company, just like these videos showed, all you have to do is hold the stock. That's it. So I really, really love the fact that they hunkered down on that and there was no games involved. There was no trading to get yourself to this amount of shares or anything else like that, at least from the ones I saw. They were very much solid. Just, hey, get these shares as quickly as possible and then just hold. And this is how you end up in a good spot over the long run. So I really, really enjoyed that. Number two, it had you setting goals. Another thing that I feel doesn't get discussed enough right here on YouTube, and I probably am guilty of it too. I probably don't discuss it nearly as much as I should. Sadly, most people invest without goals, and that's how they end up with these messes up portfolios. I see it over and over and over again in my group where people come in, they have these portfolios, and it's just a mess. I mean, they're telling me, hey, I'm retiring in a year. Or they're already retired and they don't know what to do with their portfolio and they own all these crazy growth names and unprofitable stocks. And, it looks like a Cathie Wood ETF versus a person that's getting ready to retire type situation there because they never set goals in the first place. They just bought whatever the latest hot thing was with no goals, no concept in mind. And same exact thing in reverse. You'll see a lot of young folks, who are, 20 something. Hey, I really want to be wealthy. I want to retire early. I want to do all these sorts of things. And then they own Coca-Cola, Home Depot, Walmart. Like they're incongruent with their goals. What are your goals? Well, they kind of had one out there, but they didn't specifically define it. Give me a number. Let's do the math to see if you can get there or not. And then at that stage, does that align with your goals or not? And then you make adjustments from there to make sure you have the right stocks. You can quickly do the math and see if 1,000 shares at a particular growth rate gives you the amount of money you want in regards to SOFI stock, in regards to your time frame and your plan and everything else. For SOFI, I'm conservative personally, and I believe in the long run, it will beat the market overall in regards of return. Now, I don't know how much. Obviously, it's going to be a lot in some years. Some years it's going to lag the market. It's just part of the stock market journey over time. But I can be conservative and I can plug it into a simple investing calculator, 1,000 shares at the current price, at basically a growth rate of 12%, we'll say in terms of share price. and see where I end up in 10 years, for example. And then you can kind of adjust the number of shares to get you there from there if that's what you want. Yeah, I agree. It's possible, and I hope likely, I can't say that, but it is possible that instead of 12% in the future, it goes on a Apple or a Tesla or an Nvidia style run at some various times in the future, and the return is much higher. I agree there completely. I'm not saying it can't do that at all. But to me, when I'm estimating these sorts of things, that's just a bonus. I want to ensure that I have the best chance to hit my goals in the end. And that is achieved by being conservative, not banking on a crazy Nvidia style run or thousands of percent in 5 years or all the other crazy things that I see some folks start to try to do. That shows just, hey, look, you just spend like $1,000 here and it turns into $1 million here. No problem. Guaranteed. Gonna happen. So be conservative. Figure out if the stock return gives you those goals. But that's what I liked about these videos was it discussed goals and it gave you a goal to shoot for 1,000 shares, at least a benchmark, something to start with, and then kind of deviate from from there. And that's something I feel I need to do a better job here in this space as well, discussing goals, goal setting, aligning with your goals, some other things of that nature. So I really like the fact that it touched on that topic and it created a goal for you to go after in regards to the stock market instead of just randomly picking stocks and just buying stocks, kind of as they come. But like everything, we have to talk about the downsides with these type videos too. And yes, there were some of those as well. And unfortunately, they really, really stuck out like a sore thumb. And it's a lot of things that really gets us as retail investors in a lot of trouble whenever it comes to investing. So we got to talk about those next. So number one is projections. Well, this is where a lot of these videos always fail, regardless of what stock I look at. The projections were bad once again when it came to SOFI stock. Now, I am not going to call out any names here in regards to what videos I viewed that just and who was more ridiculous or anything else like that. I don't like it. There's no reason to sit here and call out names. There's no reason to do that sort of thing and bring that sort of negativity here into our space right here. But if revenue is expected to grow 30% a year, that doesn't mean the stock price will grow 30% a year as well, and you should use that as your mark for the growth rate whenever you're trying to project these sort of things out. Who cares if they grow revenue by 30%, but the margins go down and EPS actually goes down over that same exact time? Guess what's going to happen? The stock price will go the opposite way of up and definitely won't reach that 30% mark. And on some of the videos, the projections were based not just on assumptions, not just a unreasonable growth rate, but straight up speculation and hopium and just ridiculousness on one. I mean, it's just crazy what was out there. If we haven't learned our lesson from 2021, we've got to learn it right now that when you start basing projections on speculation and hopium and things that are decades into the future, you are simply wasting your time at that stage and you're setting yourself for a giant disappointment. But more importantly, most of these assumptions, matter of fact, all of them, were not based on our next point at all. And that was no mention of valuation at all. Not one of those videos that I was able, now maybe some of them do, but the ones that were sent to me in my group there were not one of them mentioned buying those shares at a reasonable valuation. Owning 1,000 shares of SOFI at any price isn't the same as buying SOFI at reasonable valuations. Of course, unless you're DCAing, then of course you just straight up DCA to those particular shares. Okay with that completely, but they weren't talking about that. That was not what they were doing. Owning 1,000 shares whenever the stock gets undervalued makes a lot more sense to me, and valuation is key to investing in the end. Now, again, if you're DCAing and if they would have said, hey, just DCA to your 1,000 shares of SOFI, no problem at all. That makes perfect sense. A DCA is really, really hard to beat, but that's not what they were saying. They were basically saying, pay anything at all costs, just get 1,000 as quick as possible, and then it's your ticket to millions. Not really how it works. If you don't know how valuation works, you have no idea if you're overpaying or underpaying for a stock, and you start actually believing those hype projections because, well, that's what they're going to present to you is those hype projections. I mean, how did I avoid buying SOFI at $20+ in 2021 and instead loaded the boat in the $4 to $5 range instead, which gave me well more than 1,000 shares back then? You guessed it. Valuation was what told me to not buy at 20 and instead buy down at those $4 or $5 levels. And of course, that makes a massive difference in regards to the idea of owning 1,000 shares of SOFI and what that can do for you long term, being able to buy it at those particular prices, $4 or $5 range versus $20 plus. Two totally different ball games, two totally different expectations and return multiples that you'll have on that particular stock. So valuation is key, and not a single one of them even touched on valuation or just a simple DCA. I would have been okay with that as well. That didn't come up either. Number three, unintentionally encourages lottery investing. All right, now I said unintentionally because I don't believe that was the intent of any of these people's video. It just didn't. They didn't mention that, so I'm not going to throw that out there and say, hey, they were intentionally trying to mislead you into the lottery investing that everybody was, all the pumpers and everybody else were doing back in 2021, which was just ridiculous. I don't believe there was anybody intentionally doing that. But let me kind of define lottery investing for you, for a lot of you guys that don't know what that is. I mean, we all want to buy $1,000 of a stock or 1,000 shares and have it turn into millions, right? I mean, we all want to have that happen, but that's not the actual reality of becoming a stock market millionaire. The truth is, investing is about consistently investing in great companies, and those that do with time have millions because they consistently invested over time, not because they bought once, bought $10,000 worth of this and then hoping it turned into $1 million later on. Now, I understand there's some, especially kind of in the Tesla community, some guys that did that. They bought Tesla back in 2016, 17, whatever the case was, and it's turned into a lot of money later on. That is an exception. That is not how the vast majority, matter of fact, I know lots of stock market millionaires. Not a single one of them did it that way. It doesn't mean they haven't had stocks that haven't gone on Tesla style runs. I have, they have too, but they didn't just put their money in that one basket and then just kick back and then it magically happened. And of course, in order to show you how it's going to happen, they have some sort of projections out to 2030 that are purely speculative. That is just simply not how the stock market works overall. Like I said, there are exception times, but if you're investing for the exception, that's like playing the lottery and saying, well, somebody wins the lottery, so therefore my chances are good as well. That's the style, that's the strategy I'm going to go with. I'm just going to put all my money in there instead of investing in the stock market. Somebody always wins the lottery, right? Yes, they do, just like some people end up being the exception in regards to investing. But the vast majority of millionaires out there that made it through investing did it by consistently investing during bull and bear markets, good and bad markets, regardless of what happens, they just invested. Consistency is the key, and why a simple DCA crushes every other strategy out there with very, very few exceptions. Not taking profits or trading, those don't outperform a DCA, not even close. They don't even beat the indexes. Just a simple DCA, buy and hold, statistically crushes everything else. Yes, you can do a little bit of a modified DCA like I do and get a little bit of alpha on it depending upon your choices that you make. But simply doing a DCA, which is super easy, crushes everything else. So to me, simply buying 1,000 shares and kicking back on the beach is not the best approach in regards to investing. You need to be consistently investing. All right, so let's move on to the hard truth about all this. All right, so what is the hard truth about all this? All right, so we talked about how I love the fact that they're giving you a goal of trying to have 1,000 shares, and I really, really love that. However, the hard truth is 1,000 shares is relative, guys. So let me explain that a little bit further so it makes sense. I get asked all the time about what is a full position. Luke, you talk about full position. What the heck does that mean? And for me, that means the amount of money you are willing to risk in a particular stock and still sleep well at night. That amount of money that I'm able to put into an investment, sleep well at night, that right there is, how I kind of define that. That to me becomes a full position in that stock. I have all the money invested in that stock and all the money at risk that I want in that stock. But that's where the nuance of it's relative comes in. We have folks in our group where $10,000 in SOFI is a huge position. That is a big deal. That is a lot of money for them. And it's just a big position. And we have others in our group where their just simple DCA amount is more than $100,000 a month. That's what they DCA into the market and sometimes into a stock like SOFI. We also have folks who are 50% or more into SOFI because they're big SOFI bulls. And then we have others who are only 5% because one has a very high conviction, obviously, and they're super SOFI bulls, and others see a lot of risk out there for SOFI, or they have higher conviction in other plays, and those are the opportunities they want to put more money into. So you very quickly can see how 1,000 shares is not really helpful for anyone, and it's just a starting place. That's the reason why I was kind of hinting at it earlier. The starting place for you to kind of build out your plan, do some of the other work so that way you can see, is that the appropriate amount of shares are you for not? Now for me, I have way more than 1,000 shares. Others of you guys may have 100 shares and feel just as good as I do with my share count, which is a lot larger than 1,000. There is no right or wrong answer in the end. There is no predetermined percentage it should make up of your portfolio or anything else like that. There is no right or wrong number of shares to own. You have to attach it to your situation, your plan, your risk tolerance, what your goals are, where you're going long term. Like, are you getting ready to retire? Or, are you 30 years away from retiring? Are you high conviction in SOFI? Do you not really believe in SOFI? Do you not understand banking and fintech? Therefore, you shouldn't own it at all. All those things can apply, and I can't answer those questions for you. So, although I love the concepts of the videos, you've got to kind of take the goods from it, ignore the bads, apply it to your situation, and then create the right plan for yourself. And if you want to learn how to do exactly everything we talked about today and be able to talk to me in real time, get free coaching, take free courses on all of it, make sure you check out the pinned comment down there for my group. I may have left something special for those of you guys that hung around this long. So check it out, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.